Let us prepare balance sheet after buyback of the shares. So here total 5 lakh worth shares are there, and in working note if you refer here, so 5 lakh shares of 10 rupees is fully paid are there. So out of which 25% we have reduced. There is 1 lakh 10,000 equity shares are bought back. So now how many are left? So here now note number 1, share capital. Authorized capital is still 60,000 shares of 10 rupees each only, but issued capital was 50,000, out of which we have purchased 10,000 shares. So now left with us, the company, is 40,000 shares of rupees 10 each, total 4 lakh rupees. So in the balance sheet, first item, share capital, note number 1, amount 4 lakh rupees. Then second one, reserve and surplus. So major changes will take place in second item, that is reserve and surplus, because the share capital straight away we have reduced the amount and written here, but when it comes to reserve and surplus, every adjustment is made in reserve and surplus itself. So what is the reserve and surplus in the problem? So in the problem, reserves, total reserves were 40,000 and security premium was 54,000 and P&L account balance was 62,500. Now out of this we have to make the buyback, the debentures worth rupees 50,000 were issued at a 10% premium. So those adjustment we have to make when any security, it may be preference share or debentures, or to buy back preference share, it may be purchase of equity share. So when such securities are issued, the difference amount should be transferred to capital reserve redemption. That means here total amount we don't have enough free reserves to buy back. So in such cases we issue the new securities. So here in this problem we have issued 50,000 worth debentures. So remaining balance 50,000. So 1 lakh rupees is reduced. Out of 1 lakh rupees, 50,000 we have issued debentures. Remaining 50,000 we have transferred to capital redemption reserve. So from where we got this amount? So this amount is taken from some portion from the general reserve, remaining balance from the security premium, and even if we need anything extra amount, that will be taken from the profit and loss account. Let us see that same here. So redemption reserve account 50,000. So this amount we have utilized from first general reserve 40,000 rupees is there. So entire 40,000 we have taken. As we need 50, we have here 40,000 rupees. So out of 40,000 we got, we need still 10,000. So next come to the security premium. So in the earlier balance sheet, it was 50,000 security premium was there. So 54,000 rupees. Now we have issued debentures of 50,000 rupees with a 10% premium. Means we are getting 5,000 rupees premium extra. So add that to the earlier security premium. So 54,000 plus premium on issue of new debentures 5,000, total 59,000. So we need 10,000 for capital redemption reserve here. So from this 59,000 we'll take the amount. Before that, for buyback of shares, 10,000 shares, that shares were issued at 5 rupees premium. So 10 rupees worth share were bought back for 15 rupees. So 1 lakh worth rupees shares were bought back by paying 1,50,000. So that 50,000 premium should be written off with help of security premium here. So out of 59,000 we have utilized 50,000 rupees to write off the premium on buyback. So now security premium balance figure is 9,000. Now we'll take this 9,000, entire 9,000 to add capital reserve, redemption reserve. So 40,000 from general reserve and 9,000 from security premium. Total 49,000. Still we need 1,000. So that 1,000 will take from profit and loss account balance. Now profit and loss account again we have certain adjustment here. So in the problem, profit and loss account balance is 62,500. Now out of this 62,500, we have incurred loss, that is on sale of investment. Company has incurred loss of 15,000, that is 80,000 worth shares investment were sold for 65,000. So 15,000 loss was there. So deduct that from P&L account. So after deducting 15,000 from 62,500, the balance left is 47,500. From this again we have to deduct one more item, that is expenses paid for buyback of shares. That is buyback expenses 1,000 rupees. So after deducting this 1,000, the amount balance left is 46,500. Now from this balance take the amount how much required for adding to the capital redemption. That 40,000 from general reserve, 9,000 from security premium, and take 1,000 from P&L account. Total 50,000 is completed. Now here, so from general reserve 40,000, all 40,000 were taken. So general reserve is nil now. Then security premium amount. From this, after making all the adjustment, nothing is left. Again, security premium is nil. Then P&L account. So out of 62,500, 50,000 loss, 1,000 buyback expenses, and 1,000 taken for capital redemption account. So 45,500 is left. So total reserve and surplus 50,000 plus 45,500 is 95,500. So here second item 95,500. So total capital, total funds available for equity shareholders are 4,95,500. Next, long-term borrowings. So long-term borrowings from the old balance sheet if you refer, so 10% debentures of 1,50,000 were there and term loan of 1 lakh rupees were there. So now we have made a new issue. So 10% debentures of 1,50,000 plus additional debentures of 10% only. That is same kind of debenture we have issued here. So 1,50,000 plus 50,000 new debentures, total 2 lakh debentures, and term loan remaining same 1 lakh. So total long term borrowings were now 3 lakhs. So mention that here, note number 3 directly in the outer column, 3 lakh. Then next, current liabilities. So current liabilities we have not made any changes here. So current liabilities that is trade payables. So trade payables, bills payable 1,19,200, sundry creditors 1 lakh. So total 2,19,200. So here also no changes, 2,19,200. Note number 4 directly mentioned here, 2,19,200. So no more liabilities left. So make the total here. The total comes to now, so 5 plus 2 700, 9 plus 5 14, carry 1, 1 plus 1 2, 2 plus 9 11, carry 1, 2 plus 1 3, 3 plus 3 6, 6 plus 4 10. So 1 lakh 1,000 14,700. So now asset liability side total is 10 lakh 14,700. Now come to the asset side. So asset side, first non-current assets, fixed asset tangible. So here we have not made any changes here. So fixed asset tangible where building, land and building 3,50,000, plant and machinery 2,50,000. So here remains same. Land and building 3,50,000, plant and machinery 2,50,000, direct 6 lakhs rupees. So note number 5, 6 lakh rupees. Then fixed asset intangible. Goodwill was worth 60,000 and here remains same, no changes. Then term deposit 1 lakh and here also term deposit 1 lakh rupees. So here 60,000 intangible asset, 1 lakh term non-current investment. So total 7,60,000. So no changes have been made in non-current assets. So it is remain 7,60,000. Then next current assets, inventories. So again inventories no changes have been made. So inventories, stock of finished goods 1,08,000 and stock of work in progress 10,700. So both remain same here. Finished goods 1,08,000, work in progress 10,700, total 1,18,700. So note number 8, 1,18,700. Then second comes current investments. So current investments were 80,000 invested in XYZ company's share. Now we have sold all shares. We have sold all shares for 65,000, but that means nothing is left here. So sold all 80,000, no current investment. So note number 9, nil. So even though there is no amount here, show that here because we have made changes here. So nil. Then trade receivable. So trade receivable no change. That is the current investment. Trade receivable 50,000 plus 46,000, total 96,000. So here also remains same. 50,000 plus 46,000, total 96,000. And last item, here comes major adjustment. So in earlier balance sheet, cash and cash equivalent was cash at bank rupees 70,000 and cash in hand rupees 1,000, total 71,000. So what changes have taken place here? So here cash and cash equivalent, bank balance was 70,000 and when we issued new debentures with the premium, that we received 55,000 and again we sold investment worth 80,000 for 65,000. So we received 65,000 to the bank. So 55,000 plus 65,000, 1,20,000 plus 70,000, total 1,90,000. From this 1,90,000, we paid for buyback of the shares 1,50,000. So 1,90,000 minus 1,50,000, 40,000. Now again we made one more payment, that is buyback expenses 1,000 rupees paid. So 40,000 minus 1,000, 39,000. No changes in cash balance, cash in hand. So 1,000 remains same here. So finally total cash and cash equivalent in balance sheet shows 39,000 plus 1,000, total 40,000. So here 40,000. So all the assets were over. So see here the changes. 6,56,500 total shares or shareholders fund. Now it has reduced to 4,95,500. Then 2,50,000 long-term borrowing. Here 3 lakh rupees. Here 2,19,200 trade payables. That remains same, 2,19,200. And here assets 6,60,000, 1 lakh, total 7,60,000. That remains the same here, 6,60,000, 1 lakh, total 7,60,000. Then inventories 1,18,700, 1,18,700. And current investment 80,000, all sold out here. So no balance left here. Then bills, trade receivable 96,000 and cash and cash equivalent 71,000. So here trade receivables 90,000 remains same, 96,000, and cash equivalent reduced to 40,000. Okay, so make the total of this column here 700. Then 6 plus 8 14, carry 1. 4 plus 1 5, 5 plus 9 14, 14 plus 1 15, carry 1, 1 plus 1 2. So make the final total. So 700, 4, 5 plus 6, 11, carry 1, 2 plus 1, 3, 3 plus 7, 10. So 1,14,700 total of assets and 1,14,700 total of liabilities. So our balance sheet tallied here. So this is how we have to make the changes here. Remember one thing, when new securities, it may be debenture or any other kind of shares are issued, so capital redemption reserve must be the difference between nominal value of the shares bought back and new shares issued. If nothing is issued, just investments are sold and buying back with help of free reserve, then free reserve amount should be equal to the nominal value of the shares bought back.